Brian, let's talk about step up in basis. First of all, what is that?
Yeah, it's probably one of the most important concepts there are that's the most, or I should say the least understood. Step up in basis is what happens when somebody passes away and you inherit property. What is the income tax, the underlying income tax owed on that? A lot of people think that, oh gosh, I inherited this house or the stock that my parents owned. I don't know what they paid for it. I'm probably going to have to pay all this income tax on it. No, that goes away when you inherit them. So where this does not apply to, however, is IRA assets, qualified assets in a retirement account, and annuities. So if you inherit those, you're going to pay income tax on those as you take them out of the accounts. But if you inherit other appreciated property like jewelry, cars, real estate, stocks, the gains go away as of the date of death.
So it's not just real estate property, it can be anything that has an appreciation from the time that you bought it until you sold it. Can you give me a real life example, let's say using real estate, of how this might work?
Yeah, there's a lot of real life examples we can go over. The main one that is in one of my books, it's called Grandma, Please Don't Give Me Your House. And what that's referring to is, let's say that somebody had Grandma had a house and she paid $20,000 for it way back when, and now it's worth $1 million. If she sells it the year before she passes away, there's going to be a huge gain on that. Okay, $980,000 in this case. We'll call it roughly $1 million gain on the sale. Now, because it's her principal residence, she could exclude $250,000 of that, but $750,000 is going to be taxable. If she gifted it to somebody before she passed away, so it wouldn't go through probate, then there's going to be essentially the $1 million gain to the recipient of that gift. So when she gifts it, her basis goes with it. Her little teeny $20,000 basis went with it. So when they sell it for $1 million or whatever, and they have $20,000 of basis, there's a $980,000 taxable gain. However, if she passes away owning that house, now the $20,000 she paid for it steps up to the fair market value at the date of death, the $1 million. So now if $1 million is your cost basis and you paid and you sell it for $1 million, there is no gain to be paid on that. So you have to be very careful about gifting appreciated assets, especially from somebody that's older and doesn't have a lot of time left on this planet, because we might be giving up the step up in basis.
If someone inherits a house and they don't keep it, sell it right away, let's say that they keep it for 4 or 5 years and decide to rent it out, does the step up in basis still apply there?
That's a great question. So same example, she paid $20,000, you inherit it, the cost basis is $1 million. You turn it into a rental and you start depreciating on this new cost basis. You got a big cost basis to depreciate from now. It's as if you paid $1 million for it. And it goes up over the years and you finally sell it down the road for $1.3 million. Your gain's going to be at least the $300,000 plus any depreciation you took, but you still got credit for that $1 million step up. So when you sell it for the $1.3 million, now it's just the amount it went up from the $1 million that we're paying tax on.
Okay, so I would think that if someone is in the position of inheriting some sort of property, that the step up in basis could be quite valuable for them.
Very valuable, and I did want to make one more point about this. The step up in basis is different depending on what state you live in, if you're married. So for instance, in the state of Washington, where I'm sitting right now, we're one of 9 community property states. When either husband or wife passes away, all of their non-qualified assets, not the stuff in their IRA, but all of their non-qualified assets gets a step up in basis, a full step up. Both halves of everything. If you're in one of the 41 common law states, you would only get a half step up for the person that passed away. So there can be a distinction between in planning and gifting strategies and legacy planning, depending on whether you're in a common law state or a community property state.
Brian, thanks for telling us about step up in basis.